Okay, we'll go ahead and get started. Good morning, everyone. And thank you for joining our town hall meeting today for the payroll protection update. As we have said in the past at our previous webinars, we're presenting you with information that we know is true today. We continue to see changes on a weekly basis and sometimes daily. We're going to go through this today. Doug Burkholder is going to give us a rundown of the most recent changes. After that, Charlene Fazzolari is going to take us through the loan calculator that we have that helps us plan to calculate for maximizing forgiveness and also helps us fill out the loan forgiveness application. So Doug, do you want to take us through what we know of as the most recent changes?
Yeah, thank you, Mike. You know, as Mike already said here, trying to gather up the recent changes was a little bit of an interesting exercise because it seems like there really hasn't been a week since this program was instituted that there hasn't been changes. So in large part, these are the changes since about the middle of May, and the ones that I'm going to cover are some of the more significant ones. And I'll just start with the fact that, and probably many of you know this or have seen this, but there is a loan forgiveness application put out by the SBA. It's an 11-page application, which includes 4 pages of instructions. That link will be on our website, and Charlene's going to cover that briefly later here this morning. But it'd be good to take a look at that and just see the kind of information that's expected when you submit your loan for forgiveness approval. Some of the more recent changes, there have been some significant ones. Probably one of the bigger ones, this one answers questions that we've had since day one, and this one relates to an alternative covered period for payroll costs, and essentially says this, that you're able to start your payroll costs by default. That 8-week period of time starts the day that you get your loan proceeds. But the alternative period allows you to start your 8 weeks the first day of the first pay period following loan distribution. So an example to help you understand what we're saying here. If you received your loan proceeds on April 20th, by default, your 56-day period would start that Monday. But the problem with that is, at that point, there's always been a question, you're dealing with partial pay periods. What happens if you only get 7 paychecks in there? This rule is meant to address that and says that in the example I'm giving here, if you received your loan proceeds on a Monday, and your pay period started on a Sunday, you can shift that 8-week period of time forward to the following Sunday, in this case, Sunday, April 26th, so that your alternative period covers a full 8 weeks of payroll. So at that point, we're not concerned about partial periods. It's a full 8-week period. It's important to note that a couple things. One, this alternative covered period only applies to pay cycles bi-weekly or more frequent. So basically bi-weekly or weekly. If you have semi-monthly payroll, there really hasn't been anything that's addressed that yet. The other thing to understand is this shift in this alternative covered period only applies to payroll cost. Currently the 75% cost. The other 25% still fall within the original 56-day period that starts on the day of loan distribution, although there's a rule coming up that we'll talk about briefly there too. One of the other clarifications that came out, and this is one that's been speculated since day one, is that bonuses and hazard pay are eligible for loan forgiveness, as well as salary, wages, commission payments to furloughed employees. Those payments can't be more than the prorated $100,000 amount. That part's not new, but the fact that they affirmatively said that bonuses and hazard pay are allowed is a significant and welcome development. Understand, though, that at the same time they gave us that good news with bonuses and hazard pay for employees, there's a rule that says that owner compensation is limited to 2019 amounts. So while bonuses and hazard pay are allowed for everybody else that you're paying during this period, they are not allowed for owners. Owners are limited to their prior compensation. And that's the next rule that was part of this first interim guidance given by the SBA, that owner forgiveness is limited to 8 weeks out of 52, 8 52nds of your 2019 compensation. So the maximum for the 8-week period of time would be $15,385. And also, along with that, self-employed individuals, which would be your Schedule C filers and general partners, there's no additional forgiveness provided for retirement or health insurance contributions. Those amounts are included in the $15,385. The next rule is one that I mentioned just briefly, talking about that shifting 8-week period of time for the alternative covered period for payroll, and that's this rule addresses the other costs, the 25% costs, not the 75% payroll costs, and says that the costs can be paid or incurred within the 8-week period of time. So again, this is an attempt to clarify what expenses will be allowed. And what it means is that if you incur a cost within the 8-week period of time, but aren't able to pay that, you can still submit that cost for forgiveness as long as it's paid after the 8-week period of time, but before the regular billing date of the next occurrence of that. So if this were a utility bill that covers some period of time during that 8 weeks, but is paid after your 8 weeks is over, it's still allowed as long as you pay that bill before your next utility bill due date comes up. Along with that rule, they specified that advance payments on mortgage interest are not eligible for forgiveness. What they didn't specify is whether payroll, rent, or utilities are, whether advance payments are allowed there. So that's some guidance that we know about the interest, but yet more question marks about those other expenses. We have reiteration of previous guidance that set rules for when employers can exclude from loan forgiveness calculations employees who refuse to be hired. The new guidance reiterates that calculating any reduction in full-time equivalent employees, employers can exclude any employees who decline a good faith offer to return at the same pay and hours as before they were laid off or furloughed. So basically what this means is the full-time equivalent calculation. If you're not able to get the same number of full-time equivalent employees, you won't be penalized for that reduction if you can document that you made a good faith effort to rehire that employee and they did not accept that. There's a place on the application, I think Charlene's going to go over that a little bit, where you can list that employee as an exception, and because of that, that full-time equivalent reduction doesn't count against you. One of the other big developments, and this is one that was, again, speculated about since day one, was the definition of a full-time equivalent. One of those things, it seems like it ought to have been a pretty simple definition, but just recently got guidance on that. There was speculation that it could be 30 hours a week, which was the prior Affordable Care Act rule. It is not. It is now clear that the definition of a full-time equivalent is based on 40 hours a week. However, there's also a simplified method that may be beneficial, and I think Charlene's going to cover that in a little bit of detail here later as well. Let's see, the next rule or the next guidance has to do more with the relationship between the borrower, the lender, and the SBA. And one of the first rules here is that the SBA has clarified that they can review any PPP loan, regardless of size, to determine if the borrower is eligible for that loan and the calculated amount. So basically what that means is when you submit your application, you need to have it prepared for some level of scrutiny. You need to keep your records that support any amounts claimed for forgiveness. They need to be kept for 6 years. They specifically said that they can review loans of any size, even though previously we've gotten some guidance that loans less than $2 million automatically meet the safe harbor rule for need. But that doesn't mean that those loan applications won't be reviewed for other aspects. If, for whatever reason, the SBA questions amounts on your loan, you will have an appeal period of 30 days. So there is a little bit of an opportunity to work with the SBA and address issues that might appear to be shortcomings. This, one of the last rules I'm going to cover here has to do with partnerships. This one was a little bit earlier in May when this guidance came out, but initially when partners submitted their applications, there was a situation where it wasn't clear whether the partner's compensation should be included with the employees or whether it was reported separate. And that led to a number of partnerships submitting applications for their employees but not including their own compensation. If that happened, this is, I think, the only case where you can amend your application. If you're a partner who didn't get PPP funds for your own compensation, you can amend your application to include your partner level income in addition to your employees. So you're able to resubmit your application and the bank is able to pay out that additional compensation now. I believe that's all I have to cover here. So Mike, I don't know if you want to say anything or if it goes back to Charlene now.
Okay, thank you, Doug. Thank you. Yeah, just to mention with what Doug was mentioning about the partnerships, they do still, as of last Wednesday, the SBA has approved nearly 4.5 million loans for more than 510 billion, and there's still 135 billion dollars left to release available for lending as of last Wednesday. So that gives that partnership, you know, if you need to go back and get additional money, if you didn't file that correctly the first time, there is money available there. And also, if you have know of any businesses that have not applied, you can let them know that there is money still available. So with that, I'm going to turn it over to Charlene. She's going to run us through the calculator that we have. Charlene, are you ready?
Right.
All right.
Okay. So I'm going to briefly go over the SBA, the PPP loan forgiveness application that Doug was talking about, as well as our latest, most revised forgiveness calculator to help assist with that. So I'm going to take a minute here and share my screen. So what I have up here, this is the loan forgiveness application. This is the 11-page application that the SBA released about 2 weeks ago. And we suggest that everybody go download this application, print it out, look over it, read over it. Ultimately, this is going to be the piece that gets turned in to your bank. There's some documentation that gets turned in with it. There's also some documents, like Doug was saying, that don't get turned in, but you have to hold on to them for 6 years in case they would ever come back and question any figures on there. So that way you have the documentation for that. So there's a lot of instructions that go with it. This here is the primary page of the application. There's a Schedule A and some worksheets that flow through to that we'll look at our Excel calculators and how they can assist in flowing through the numbers to these worksheets. They gather information at the top that's kind of informational. One of the things that they look for is if you had an EIDL advance amount. That information goes on here, but there is nowhere for you to put the dollar amount of the EIDL that you may have received. They will automatically take that off at the end of the calculation on their own. Our calculator will show you where that's located on there so you can see what the actual forgiveness piece coming back will be. So I'm going to switch over here to the Excel calculator that we have. So what the Excel calculator is for is this will help you to maximize your loan forgiveness, to also look to see, you know, where you stand at in your payrolls. Because a lot of companies, they got their loans early on or nearing the end of their 8-week period, so you can kind of gauge to see where you're at, use it as a planning tool to kind of make some decisions here before you get to the end of your 8-week period. Some items of note, there's 2 areas that you can have possible forgiveness for reduction of wages. One of them has to do with like a wage reduction. So what that has to do with is if you would reduce somebody's annual salary over the 8-week period. The other one is with the wages is if you reduce like their hourly rate over the 8-week period. The other possible reduction is a full-time equivalent, which we often refer to as an FTE reduction. But then we'll kind of go over, there's some safe harbors and some other things you can do to kind of not get those reductions done that are included in here. So those that have been following the calculator with us from the beginning, it started out as a simple 1-page calculator. And this here is kind of what it looked like. Very basic, but it has now evolved where there's probably about 10, 11 tabs on here. We have instructions at the beginning that kind of goes along with each of the tabs that you can reference back to look at to see how they relate to each of the tabs. The nice thing with the new calculator that we have, there's a tab here that once we fill in all the other pieces, the application's totals, these amounts here will assist you in filling in the application, and they correspond with each of the lines on the application form. So once you're done doing all the calculations, you can come back to here, pull these figures and put them in on the application form. So I'm going to start here in the back, and there are 2 tabs back here in the back that are non-wage calculating, but they will help you in your overall application. So the first one is the additional employee exceptions. And Doug briefly mentioned this here. You know, if you have an employee that requested like reduced hours during that 8-week period, maybe they had a child at home that was in school and they needed reduced hours to be able to help them out with like their education. Or if you offered an employee their job back and they rejected it, you can put in here each of the employees, and then you would mark up here, you know, the reason, and you want to make sure you have written documentation for this, you know, if they'd ever come back and question it. And then we come down to the bottom here, you know, the total number of exceptions. So what this does is if you know, offered somebody a job back, they don't take the job, you put the exception in here, you don't get a reduction for having a reduction in full-time employee for that person. The other tab that we have here, the FFCRA, what that is the Families First Coronavirus Response Act. So if you took a credit for any of your employees' wages under that credit, they are not eligible for the PPP forgiveness for the wages. You can't double dip between the credit and the PPP forgiveness. So this is just an area to help you reconcile down all your employees' wages over the period. This is where you can also enter non-resident wages if you have any employees that are non-residents. So from there, then we'll kind of go into calculating the payroll piece. And for the payroll, there are now 4 tabs for calculating the payroll for the employees. And we'll start here with the employees that have earned over 100,000 in 2019. So what you do is you look back at 2019 to see who had annualized wages over 100,000. And those employees will go on here. And something to note is every single employee that you have is going to be listed on one of these tabs and then also in the application. So you want to go through and list each employee's name on whichever tab they correspond to and fill in their information. So with the ones over the 100,000 in annualized wages in 2019, you just put in their covered hours in the period and covered wages in the period, and it'll calculate their full-time equivalents. And on this one here, for 100,000 people, there is no wage reduction if somebody had earned 100,000 in 2019 and their wages were reduced during this 8-week period. So if they went from 100,000 in 2019 and then, you know, the rate dropped to 75,000 over this 8-week period, you do not get a wage reduction for that employee. So we're going to hop over here to the salaried employees tab. So in here, the same thing, this covered period, which it can be, you know, the 8-week period starting the funding date, or if you're eligible for that alternative payroll period, you can use that alternative date in here. Whichever method you pick between the funding date or the alternate period, wherever it's in the application that it says alternates, if you choose alternate, you have to use it in those places. You can't pick and choose, you know, salaried or one way, hourly another way. It's got to be consistent through the application where it lists the alternate period. So what this section does here is this calculates the salaried employees, what their annual wages are for the year. And then what it does is it compares it to their wages in the first quarter of 2020. And if they do not have a reduction of 75%, there's no further calculation other than the FTE calculation for them. So if you would have somebody that would have a 75% reduction over the period, there are some safe harbors that you can do. We'll look at a little bit closer in the hourly employees because there's more detail on that one. So then we'll flip over to the hourly employees. So the hourly employees, again, you list all of your employees along here. You list their hours in the covered period, their covered wages, and then it'll come to an average hourly wage for the employees. You again enter the information for the first quarter hours and the first quarter wages, and it'll come up to their average first quarter wages. They'll do a comparison to see if they drop below the 75%. If their wages drop below the 75%, then you have to do some safe harbor calculations to see if you have a wage reduction. So the first safe harbor calculation, what they do is they look at the employee's hourly rate at February 15th. And they use February 15th kind of as the starting period, because that's kind of pre-coronavirus, where everybody's wages, they kind of assume that everybody was working normal and no effect by the coronavirus. Then they look at the safe harbor hours and wages from February 15th to April 26th, because that covers the period where companies were affected the most by the coronavirus with wage reductions. So what it does then is it looks to see, was the employee's wages reduced over this period compared to February 15th. If they were reduced during this time, then you can do a second safe harbor test. If they were not reduced, you don't need to do second safe harbor test. What the second safe harbor test is by June 30th, and that's kind of like after when they signed this bill back in March for the Payroll Protection Program, that's kind of where they thought that employers would be fully back open and fully to normal. But as we see here in Pennsylvania, that's kind of to be determined if that June 30th date is going to be an accurate date. But that's the time period that they chose. So what you have is you have till June 30th to restore the employee's wages. So say maybe an hourly employee was dropped from $15 an hour to $10 an hour over that 8-week period. You have till June 30th to restore their wages back to the $15 an hour. And the way that it is now is it's basically that period there at June 30th. So that way, if you put them back at June 30th, you do not have that 75% reduction. Then to follow us over a little bit further here in a calculation, this here is just your payroll weeks in the first quarter to kind of get to what their average weekly wage was in the first quarter, and matching up to that 75% reduction rule. If you do end up with somebody with a wage reduction, it will fill in here. And as you can see, there's like steps 3A, 3B, 3C. This follows along with the schedules in the application, kind of corresponds with the lines if you're looking for details on each of these. The last column that's here that shows up in the salary, hourly, and over 100,000 is the amount of the average FTE, which is a full-time equivalent. So they came out, kind of like Doug said, and they've now based it off of a 40-hour work week. So what it does is it takes the total hours that you enter in that 8-week period and determines on to the nearest tenth what percentage of a full-time equivalent employee they are. No employee ever goes over 1, so 40 hours or more, they equal 1. They did come out with a simplified method in the application. Our spreadsheet's not set up to calculate the simplified method. It just calculates to the nearest tenth. But if you end up at the end of this application where you have a shortage on FTEs, I would recommend to go back and look at the simplified method to see if that would maybe be more beneficial to you. And what the simplified method means that if somebody works 40 or more hours, they equal 1. If they are anything under 40 hours, they're 0.5. So you can kind of go back and see, if this method, if you fall short, and even doing the safe harbors and the reductions, you fall short, you can go back and look to see if doing the simplified method might result in a better results for you. So then the last tab I'm going to go to is the owner's compensation tab. And if you notice on here, the owner's compensation tab, there is no columns for FTEs. So with the application coming out, that was something that was new, that owners do not count in the full-time equivalent calculation. So I'm going to start at the top here. So this section here is for the 1040s for like the Schedule C, Schedule F self-employed individuals. And what you put in here is your 2019 income from your Schedule C or Schedule F. And what it does is it calculates that 8/52 of 2019 as the allowable amount for the kind of like a wage equivalent for a Schedule C or Schedule F for 2020. For the partnerships, similar to the Schedule Cs, you use information from your K1, you enter the information from 2019, and it calculates the 8/52 to basically equivalent to, you know, a wage compensation for the self-employed partners. And then this here is a new section in our calculator for owners for S Corps and C Corps within their compensation. And you'll need to put in the 2019 compensation for each owner, as well as the wages during that covered 8-week period. And there's a calculation here for the 8/52 of 2019. And then there's also the 100,000 limitation. So it will take the lower of the covered period wages or the 8-week 2019 average, which is something that was new when the application is released. So it's the lower of the two with a maximum of that 15,385, which equates to 100,000 annual limits. So that is the big summary of the wage calculation piece. So then once you go through the wage calculation piece, that will all flow through back to our loan forgiveness calculator, putting in the total wages in here over that 8-week period. It will also fill into the application totals into the corresponding, you know, payroll costs, you know, and then it also will have in here for like the owner's compensation, it'll fill in all of these for these schedules. So then the other piece that we talk about in relation to payroll is the full-time equivalent. So there are two tabs in the calculator for the full-time equivalent calculation. The first one is the original FTE. So there's two different periods that you can calculate your original FTE. And this is the baseline, kind of where they start at in calculating that full-time equivalent for the reduction. So the first period they look at is kind of like the same exact period 1 year ago to see what your full-time equivalent was a year ago. So any full-time employees that you have in here, you just put a 1 for each one. Anybody that's an hourly or variable hour employee, you'll put their hours for the period inside of here. Take note this first column here is from February 15th to February 28th. And then what this will do is this will calculate the total number of employees to the nearest 10th. This here is another place where you can use like the simplified method, but I'd recommend just going through calculating it like this. And then if you get to the end and you're short on FTEs, then going back and, you know, trying to simplify it, the simplified method to see if it'll yield better results. The other period that they look at is from January 1st to February 29th in calculating the FTEs. The same thing here, you put in the full-time, you know, those with 40 hours or more here, variable hours here. And then what it'll do is it'll calculate down here the two periods of full-time equivalent. And it's at the election, so you can use either one of those periods. So we have it set up that it'll just pull the lower of those two figures into our application. So definitely want to start with the lower side on the full-time equivalent. So then the actual calculations for each FTE is in all of these, the hourly salary ones. And then there's those additional exceptions we looked at. But then there's a full-time equivalent worksheet back here at the very end that pulls in all the calculations from the 8-week period. And if you fall short, you know, during that 8-week period that they have in there, there's another safe harbor calculation that you can do as well, where it looks at the period of February 15th to see if you had a reduction in full-time equivalent employees to this period, February 15th to April 26th. So after you've completed all of that, we'll kind of go over the loan forgiveness calculator, just kind of look at that in total and how that looks. So this up here is where you have your original loan amount. This here is the FTE from the elective period. That there will pull in the lowest amount of those two on that original FTE tab. This is your loan date. And here's where you can put in that, if you got the economic disaster loan advance, you can put that in here. This calculator that we have will reduce that back out of the forgiveness at the end if you have that. Where the actual application, it just kind of lists it as the top as like an informational piece to the SBA, and they'll kind of do the calculation on the back end. So then from all the calculations, it will pull in the wages over the 8-week period. And any items in red boxes are information that you'll fill in. So here's where you can put in employer contributions to employee health insurance through group health plans. Contributions to employee retirement plans. So if you have like a 401k, simple, the employer match on those plans goes in here. And then any state, local taxes that are employer paid taxes, not the employee withholding taxes, go in here. But then this will come in, and it also brings in the owner's compensation as well. So this will bring in your total payroll that you have over the 8-week period that you can use towards the loan forgiveness. So there's the other qualified expenses that Doug was talking about that you can use as well. And there's the 75-25 rule that you need to have 75% for payroll and 25% can go towards other qualified expenses. So in here is where you can put in your rents that you have, and the rents are now listed as personal and rental on properties, and the mortgage interest as well is on properties and personal properties. And then the utilities over that 8-week period to get you to your total qualified other expenses. So when we come down here, this just kind of summarizes everything for you, pulling in all the payroll expenses, the other qualified expenses. If you would have a wage reduction, and you don't need any of the safe harbors, here's where that 25% wage reduction is going to come in. And then this here, if you have full-time equivalent reductions, this here is going to show you like what your percentage is if you have full-time equivalent reduction. Here's where we look at that 75-25 rule that you need at least 75% on payroll. You know, 25% can then go towards the other expenses. And then this here kind of goes what your total forgiveness amount is. And then at the end, this over here will show you if you have a loan balance remaining. This is where we're talking about kind of going back to the beginning, that you can use this as a tool to help you maximize your loan forgiveness. You can use it to help you determine like where you're going to end up at the end of the 8 weeks. You know, maybe, you know, you end up with a loan at the end at 1%. You know, maybe you have some employees that you want to give some bonuses or some hazard pay, you know, at the end of the 8 weeks. You can kind of use this tool to help you out. But the worst case at the end is you end up with a loan with 1% interest over this 8-week period. And in the whole scope of things, the dollar amount of the interest is minimal when you look at the total picture. And the amount that you actually get forgiven for payroll costs and some of the other costs. That was kind of the big overview of the Excel calculator and the application. Turn it back, Mike.
Okay, thank you, Charlene. So that was the overview of that calculator. What we are thinking of doing with that is we have an engagement letter to assist in preparing that for our clients. We have that ready to go right now. A couple of updates that have happened over the last week that may impact on how we handle this. And right now, for those of you who have received the funds, in an early stage, we're in kind of a predicament right now because the House approved legislation last Thursday that changed some of the parameters that we're working with. The House called the Paycheck Protection Flexibility Act, HR 7010, extends the 8-week period to 24 weeks for the time for the PPP recipients to spend the funds. And it also lowers the 75% for payroll that Charlene was just speaking of to 60%. So that's at the Senate right now. And the Senate also has a version where the 8 weeks goes to the 16 weeks, but would not change the 75% of the payroll cost requirement. So I believe as it stands right now, Mitch McConnell is leading the effort in the Senate to try to get all 100 senators to move this week on passing some version of the House Senate bill that would extend it anywhere from the 16 weeks to the 24 weeks. But as it stands right now, we have to move forward with what has passed and what we know today. For all we know, I think Charlene was talking this morning about the Senate might go on break next week or something. So, you know, if that happens, then it might not even come back. They might not come back to pass anything till the end of the month. We do have the application for the loan forgiveness on our website if your bank has not provided that to you. We will have a recording of this video up on our website as well. Charlene, Doug, did I miss anything there on the updates? So we're going to open it up for questions. We're going to try to take some questions here in the last couple of minutes that we have. If anybody has any questions, they can go into the chat and type in their question, and we'll see if we can answer any of those questions. I don't see any questions coming up right now. We have some. If an owner is an S Corp, is a W-2 employee, how does that work? So for the S Corp, so you are limited to the wages that you took in 2019, 850 seconds of that, or a maximum of that 15,385 over that 8-week period. What that does is it prevents you from giving yourself a bonus in the 8-week period. We have another question. Can I take the remainder of the PPP loan and hazard pay it out? Yes, you can. That new interim rule that came out that Doug was speaking of at the beginning allows you to give out bonuses and hazard pay to fully utilize your loan. The next question, do you get penalized on wage reduction for a fired employee? I'll let Doug or Charlene handle that one.
Yeah, I can take that one. So on the Excel calculator, there was, Doug had mentioned there's exception things, and on the Excel calculator, there's exceptions, and one of the exceptions is a wage reduction for a fired employee. So if you have cause for firing somebody, you put them in there. It doesn't, you don't get penalized for the FTE reduction, but if you don't hire like another employee to replace them, you don't have enough payroll or your other employees' payroll won't cover it, you can get penalized that way, but you don't get the the election for that hired employee.
The next question is, the majority of our full-time employees do not get 40 hours. Should I fill them in as a single full-time employee or fill them out as variable employees? Charlene?
They would go under the variable employees. You just put their total hours in there for those periods and calculate them out to the tenths to get to how many full-time equivalent they would equal.
The question is profit sharing part of the forgiveness. As far as what we understand, it is, you can do 8 50-seconds prorated of your, if you would normally do a annual profit sharing contribution for your 401k. Next question, do temp employees for the 8-week period count towards the FTE? No, they do not. The next question is, if we are a C corporation, do the owners treat themselves as salary payroll?
The owners of a C corporation actually go under the owner's compensation tab in the calculation. They don't go under the salary or hourly, they go under the owner's compensation, and then they are limited to their 2019 wages.
2019 wages, yes, okay. Ben, so do you add shareholder insurance to an owner's 2019 compensation? So that's one of the gray areas. You can read it right now as the owner's compensation. So what they did was they put self-employed individuals and partners. They said that you could not use the retirement and the health insurance for the self-employed individuals and retirement in the same paragraph that they mentioned the owner's compensation in an S corporation. So there's interpretations that retirement and health insurance, it's saying that you can't use those in the payroll costs. There are some of us that think that you can. Some of us that think that you can't. So we're hoping that there's some clarification on that, the shareholders' health insurance.
Mike, and I have something to add to that too, is also checking with your bank as well. Because some of these things, we have a feeling that certain lending institutions are going to take their own position on that. So when we're working through this application, it's important to work, with your banker as well to see what their position is.
Housing allowance count as part of the forgiveness. Do either of you know that answer?
Yes, there was guidance issued that explicitly stated that housing allowance is included as part of payroll costs.
The next question, is everyone as confused as I am? Yes. Yeah, without a doubt. It's a full-time job keeping up with the changes on the PPP. Ironically, it was, I think, April 2nd when the actual application went live. And today is June 2nd. And it feels like longer than 2 months that has elapsed, for sure. We have another question here before we wrap up. Can we include local taxes that need to be paid out when quarterlies are due? I believe the answer to that is yes, because they are incurred but not paid.
Well, I think it's going to depend on your state, because in Pennsylvania, local taxes are employee withholding, but there are other states that do have local taxes that are employer related.
All right. We have the question, what are the chances of extension to 24 or 16 weeks? I think there's a good chance because they see that the difficulty that everyone is having trying to get everything into the 8 weeks. I have reservations on counting on it just because of they have not been in front of this at any point in time during the past 2 months. And there are clients that we have that the loans are coming due within the next couple of days. So we need to look at those and try to do some planning for them, even though we realize that it could be changed. So I think the chances are pretty good that they're going to have some type of an extension on it. But again, we can't count on that. Okay, we'll wrap that up for today. Thank you again, everyone, for joining us. You can email us with any specific questions, and everybody have a great day. Thank you.